Let's get the early take. Doug Roberts, Chief Investment Strategist with Channel Capital Research, is, in his words, slightly bearish. Adam Bold, founder and CEO of the mutual fund store, is still being bold, calling for 11,700 on the Dow. All right, let's get the bull case first. Adam, 11.7. Why?
Well, Mark, the thing is that there's been so much pessimism. You know, there's a lot of things to worry about, and it's very easy to say, oh, well, this time is different. But I think with time, we'll find that this time isn't different. Corporate earnings are coming in better. The consumer is back. And we're in a much better economic climate than we were a year ago. And I think that there's still opportunity to surprise to the upside.
Doug, what does slightly bearish mean?
It means right now we're in a very broad trading range, ranging from maybe, let's say, about 1040 on the S&P to around 1160 on the upside. You're going to bounce in that range during this period of time. There's low liquidity. The government still is the lender and spender of last resort. And right now, you're starting to see a lot of the stimulus start to run out, and you're not going to really see much on the fiscal side, at least until really after the election, until there's some certainty there. This is starting, I'm thinking that this could be more like a 1994 type scenario where you bounce back and forth with possibility of a slight rally after the election, but you may end up the year pretty much where you started, with a lot of volatility in between.
Adam, I want to ask you about the point Doug raises about the midterms. Right now, the market, it seems, is pricing in a Republican victory in the House. I guess on in-trade, 61% odds of that victory happening. So here's my question. If that doesn't happen, if the Democrats retain control, is that a market-moving event? Does that make you more of a bear or not?
No, I really don't think so, Aaron. And the reason being that the Republicans, either way, even if they don't get control of the House, what they are going to get are enough seats so that the Democrats can't do anything dramatic. And regardless of what your own personal politics are, the markets do like gridlock. What's happened is, you know, this Congress has kind of run rampant and done whatever they wanted. What we will see, no matter what, after these midterm elections, is that the wide-sweeping kind of environment-changing political scene, that should change.
So, Doug, what about it? How does I don't know. I don't know how to characterize this market, whether it's discounting a Republican victory or whether it's discounting a Democratic victory, but can you somehow game the election here? Should you be gaming the election as you think about investing?
Right now, we're in a trading market, Mark. I mean, we're going to be bouncing back and forth. There's very little liquidity because in the sense of the market discounting it, a lot of people are kind of sitting it out. If you look at trading volumes, they've been very, very low. So then what happens is you can have outsized reactions to the news. If you're very good at playing short-term moves, there's money to be made. But right now, I mean, if you're not a very nimble trader, it can be very, very frustrating during that period of time because the real way that people are anticipating the market is they're staying out of it, and therefore you don't really have a lot of people. You're seeing that this morning. Things can change very, very quickly just on a dime, and that's very, very difficult to play, particularly if you have a large block of stocks to invest.
All right, Doug and Adam, thank you both for sharing your thoughts. Appreciate it.